I hope you are excited because this could be the last meetup. This could be the last Crypto Hub meetup before World War III starts. So you better make it count tonight. You're gonna look back to today and gonna say, oh my God, that was in the beautiful days when we still had electricity and running water and everything was fine. Today is a fine day because we are going to learn about the long-short strategy. I'm curious to know, it seems to be like a business secret, so I really want to know what's going to happen. But before we start, I'm gonna make some announcements. Now, who of you is here for the first time? Up with the hands. Excellent. The regulars that come for the first time. I'm very excited to see you, but for those of you who are here for the first time, welcome. Make some friends. You are not alone and you shall not stay alone. Look around, look to your left and to your right. This person might steal your Bitcoin. Or maybe this person might be your friend. So be open and ask the question that you want to have an answer to. Ask it to the speaker, maybe ask it to me if I'm not too drunk, or ask it to the person next to you because they're all like you, like-minded and interested and curious in what's going to happen next. I say Bitcoin is going to go up next. But really, this is not financial advice. I have no idea. And I've been saying this for years and years and years. And here we are. Welcome to Crypto Hub Malta. We are the blockchain community of Malta. And physically, we are at Soho Office. Soho Office is a co-working space with a small spa area and a gym in the first floor. Second, third floor are co-working offices that you can rent. If you want to try it for free, hit me up. We have an agreement so you can have a test day for 1 day. We are here at the fourth floor in the event location, and during the day, actually, they're using this as a restaurant. They're serving lunch here, and it's frankly a lovely, lovely place. As you can see, a little bit of a letter view. So if you're looking for an office or want to register a virtual office, let us know. This is Soho Office. Normally, there's the poster here. And if we would have the poster on the screen right now, we would be seeing other supporters that are making this possible. And that is, for one, the Bit Research. I think the Bit Research is a little bit similar to you, maybe not so finance heavy, but it's a non-custodial trading firm and they do research. So if you want to learn more about that, or if you want to step up your game about trading, go talk to the Bit Research. They're based in Baluta, in Spinola Bay, in St. Julian's. Also, and this is big news, we broke this news last week, and since then we had a lot of conversations. In the end of May, there's going to be a blockchain conference in Valletta. It's going to be a conference that is organized by people that live in Malta with people that they invite from outside. So it's a Maltese international conference. It's called Chain of Blocks. One major topic is going to be interoperability. Now that is quite a word to pronounce, interoperability, but really what it means is, it means that in the future blockchains are going to eat the world and connect everything. Everything. That's one of the main topics we're going to talk about, multi-chain world and interoperability. Now, if you think that is boring, shame on you. I would like to hear what you have to say. And this is not a joke. Come and talk to me after the presentation if you work for a super interesting Web3 blockchain related business, or you have a new innovative idea that you would like to bring out to the world, a chain of blocks in the end of May in Valletta. Okay, I hope I have not forgotten too much. Maybe one last thing, because we had a conversation about this. If you've been reading the newspapers these days, you are misinformed. But if you actually looked at the news, you would know that a lot of things are happening right now that can impact the oil price by a lot. Now, if you think of Bitcoin, you should think about electricity and energy that is used for the mining. And there is a very stern relationship between the price of Bitcoin, the hashing capacity, and the difficulty on the blockchain, but also the price of electricity. So maybe you are going to address this later, because this is above my pay grade. This is not only geopolitical, very dicey, it is also really technical, interlinked about these prediction models that you are working for. Daniele Bernardi, you work for Diaman Partners. This is your second presentation. I give the floor to you. If you have questions to him later, how to survive the bear market, this is your chance. Everyone, Diaman Partners.
Thank you to everyone to be here this evening. I believe that the Third World War just was started 2 weeks ago, unfortunately. But anyway, I hope that I'm wrong. So, just to start, how many of you have just invested in perpetual future? Very few. I was supposing that anyone. So, I have to make another question. How many of you knows how perpetual future works? A bit more, okay. So, today I will start presenting this. So, the future, the derivatives, started to be explored in 1930 by Keynes. I suppose that most of you knows was a very famous economist. And then in the following year, there was a lot of discussion, academic paper related to how the future can work. And in 1972, the CME, the Chicago Mercantile Exchange, launched the first future that was related to currencies. And then after 2 years, 3 years, they launched the future to interest rates. And in almost 10 years, they launched the equity index future. The future is a contract made by two persons usually used to transfer the risk of the price from an economic operator, such as the oil producer, to a financial operator, a speculator of a banks or investment company and so on. And they became, years by year, bigger and bigger. Nowadays are a lot bigger, a lot more liquid than the equity stock that I suppose any one of us know better. But how is working? Basically, are designed to transfer to replicate an investment plus the cost for keeping this investment. If I'm investing in an equity index, I will pay the interest rate to borrow the money, and I have the exposure to the index. So because I can have a small margin using to have the exposure to the index through the future, and I have the cash that I can use for other investment, so I have to pay an interest to make this equilibrate like investment. But if I purchase a future on oil, I have to pay also the storage of the oil. So the price of the future has to be higher than the price of the oil. This technically is named contango when the price is higher, or backwardation when the price is lower. I don't want to bore you with this technical stuff, but I want that you are aware that if I purchase a future, or even of a future of Bitcoin, that has a 3-month period, for example, I have to pay more, a higher price to purchase the future, because there is at least the interest rate or other minor cost. Yes, cost. There is another term, but cost is good. And anytime that I'm rolling, I have to, after 3 months, I have to close the future and start another one. I pay again the rolling cost because I pay again the contango, you know? So this is how the traditional future work. What does it mean? That I can replicate an investment in any kind of asset, oil, future, diamond, gold, whatever, Bitcoin, crypto. But of course, I have to pay the cost to have this asset, to store this asset. Then, I don't know, okay. Then, who know the perpetual future can imagine that was invented with the crypto during the years when the crypto was born. But in the reality, the first one that spoke about crypto was Robert Shiller. Robert Shiller is a very famous economist, and he started to think that it could be possible to have not a future that every 3 months expire, go to maturity and expire, and I have to purchase another one, but one that has no expiry date, so can be forever, you know. But of course, for the traditional finance, it was quite impossible to think to make this kind of future for equity, for example, because that means that the counterparty has to change a very small amount of money any 8 hours, for example, like in crypto, no? And it was not possible to make a bank transaction every 8 hours just to have a future that is not expiring. It was more convenient to have the previous version. But when crypto happened, the market is open 24 hours, 7 days a week. No, this can be possible, and the crypto has the decimal that are, for example, Bitcoin has 8 number after the comma, Ethereum has 17 number after the comma. So of course, it's more easy to make a small transaction any 8 hours to keep the relation between the parties. So how a perpetual future works, basically, we make an example for Bitcoin, you know. Bitcoin is 71,000 today, around, I don't know. And the spot price has a path, no? And the future can be a slightly higher, but very small amount higher. So means that there is a positive funding, and the long position who purchased the future has to pay the funding rate that is an interest, basically, to the short ones. So who sell the future to the people that purchase the future. If the price is slightly negative, then is the short position that has to pay the buyer. Okay, the funding rate change a lot. Years ago, in the previous 2 cycles, was also 50% a year annualized, the funding rate of Bitcoin and Ethereum. Then, when arbitrageurs arrived to the market, the funding rate decreased, and nowadays probably for the large crypto is 8% a year, but around 80% a year. But if I have 1 Bitcoin and I short with the perpetual future the Bitcoin, is like to have USDC, because I neutralize the fluctuation of Bitcoin, but I gain the funding rate if I'm in this position, or I have to pay if I'm in this position. So basically, when the trend is positive, usually the people with the longs has to pay the short. In the situation like this is the contrary, okay? Because of course, the people tend to short the Bitcoin to save their money, so they have to pay an interest to protect their money. But how is very interesting this? Because I can purchase I can take an exposure to Bitcoin if I have $10,000 for $100,000, $1 million, okay? Because I can use the leverage. The leverage can be good or can be a nightmare if you are not able to use. Anyway, we will see in a few minutes. Nowadays, the perpetual future has more liquidity than the spot price of the crypto. Basically, in Binance, there is 50 billion of transaction a day, only in Binance. And the overall industry is more than 100 billion of transaction a day, more than all the crypto assets altogether. And basically, all the major exchanges around the world are proposing to their client to use the perpetual future. And sometimes there are more than pair in perpetual than spot pair in some cases, but there is a lot of perpetual pairs that the people can use. And nowadays, Kraken, for example, are starting to make the perpetual to equity stock, to Standard & Poor's, to Nasdaq, to the single stock either. Because there is basically a contract, a derivative contract that is easy to implement. And which is the problem of the perpetual future? The leverage. Can be a very good opportunity, but is a mess for a lot of people. Because most of the exchanges can let you, if you have 1,000 euro, to leverage to 100,000 euro. So that means that if I have only 1,000 and invest in Bitcoin with a leverage 100, it's like to have invested 100,000 euro or dollar, as you wish. So if the Bitcoin goes up, I easily double my 1,000 euro. Because if grow 1%, I have double my 1,000 euro. But the problem that most of the people doesn't consider is that if the Bitcoin go to 99,000, I lost all my money because it's just 1% that I completely cancel my margin and I liquidated. And this is unfortunately a huge phenomenon that basically in finance, there was Warren Buffett, maybe someone of know who is. Warren Buffett say that the equity market was created to move the money, to transfer the money from the impatient investor to the patient investor. No? And the perpetual future, from my point of view, is sad to say, but is the truth, was created to move the money from the not experienced guy to the more experienced guy, because or to much greedy guys to the patient guy. And since October last year, when the Bitcoin started to crash, maybe someone remember that it just in one day was liquidated 20 billion in asset just in one day, you see there. Basically, from that period to today, was liquidated more than 80 billion of euro. So that means that a lot of people lost their money. It was liquidated, and other people take that money as gain, you know. So it's very important that the leverage will be used by you if you want to use this kind of instrument very, very carefully. because there is a big risk to be liquidated. But there is also a big risk to make money, especially in the crypto winter, because in the crypto winter, if you are exposed to the crypto asset, the risk to lose money is very high. So how you can create a very simple long-term strategy using perpetual future? So this is an academic example, just to let you know. But we have divided all not all, but the majority of the crypto universe in sector. The token that make AI, the token that make DeFi, the Bitcoin ecosystem, layer 1, layer 2, and blah, 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 no? Real world asset and so on. So we have clusterized all the token that the principal, at least token that there is, that are liquid in the exchanges. So what we have done, we have eliminated the non-liquid token, the token that are trade only by market maker, because most of the token are traded only by market maker and there is not a real volume. And we have selected the 10 most promising projects per sector that you saw before. And so what we have done, what we have seen, if we take a two sector and we take exposure to the proof of work token and to AI token, we can see that basically the proof of work token went better for most of the time with respect to the artificial intelligence token, you know? So that means that if we go long to the proof of work and we short the AI token, maybe we can have this kind of performance, the blue line, you see? Because if we are long on this token, and this is the position on the short position of the AI token, the result is this blue line, okay? What does it mean? It means that I reduce a lot of the volatility of the two historical series, you can see. And in this case, we make in 3 years, here there is not there isn't the data, but it's 3 years, it's here. In 3 years' time, more or less, we gain 100% with this strategy, okay? Is a lot, is not enough, anyone can say. But with a simple strategy position on two sectors, one long and one short, we can have a very good result. So what do we say? Okay, try to see what's happened if we compare long and short all this sector, okay? The example that we saw before is this one, AI short, this is the short, and long, proof of work long is here, okay? But there are other that was better, you see, than the one that we choose. But so we could see that there is some pair that works very well and some other that are not working totally. So after the return, we saw the maximum drawdown. Maximum drawdown means how percentage has lost from the previous all-time high, okay? So the losses in this moment. So, of course, for each strategy, if we see the previous one was minus 24%. So there was plenty of, for example, this one or this one that make reduce volatility and lost during this 3-year time, you know? So, and then we saw the Sharpe ratio. Even this the Sharpe ratio of this strategy was 1.48. For who is not technical, Sharpe ratio is an indicator that put in relation the risk and the return. No? So lower is the risk compared to the return, better is the Sharpe ratio. Or if the return is similar, if the risk is similar, if the return is higher, the Sharpe ratio is higher. So in that case, there is a lot of token that has a higher Sharpe ratio than the example that I show you. So if we take some other example, we saw that we can constantly have, and in this case also very persistent, have a good increase of return with a very low volatility, with a very low drawdown respect to have the position of a single sector. And to finish this, I made also Bitcoin versus shitcoin. For who is a Bitcoiner, this is an example, Bitcoin versus shitcoin. So we take Bitcoin, we short some of the sector that we saw before, and even in this situation, we can see that there was a very good performance with this model. So this is an academic example. In the reality, this is the backtest that we use for launch our strategy, but I don't want to make a promotion this evening. And this is the real track record that we have done till now. But just to conclude, for doing this kind of strategy, especially if you want to be actively change the position, you need to have an automatic execution, the so-named algorithmic trading execution. Why we need the algorithmic trading execution? Because this is an example of the book of one token, okay? Not very liquid, of course. Between bid and ask, there is 23 basis points. So I just start if I trade with 23 basis points of payment more than the fees that the exchange asks us for paying. Most of the people are not considering that sometimes there is a big spread to buy and sell, no? But this is a real and hidden cost that the people has to pay when are trade in crypto. Then, if I just want to purchase 10,000 US dollar, that is not a lot of money, I have to pay 26 basis points more, because I basically empty all the book, you see? So I need something that can prevent this huge cost when I make the trade. So what we have developed, and here there is the engineer that made this. We make a trading, the name is time weight average price algorithm. So basically, we decide, I want to sell 100,000 euro, no? And okay, in how many order I will split this, and in how many time I want to sell. No, so the frequency and the time decide any slot of trade, and the amount, of course, that I have to pay if I want to buy any time, or if I have to sell the amount that I want to sell any time. So this is just some example. You see that any minutes, automatically the computer make the order, put the order, and of course put the order at the lower price of the bid, this one. And at this point was executed. This was executed. This was not executed, it has to purchase at a higher price. Just to make to let you understand, basically, the 72% of the trade was made with a market or maker order. That means that I pay less fee and I have a good price because I put a bidder price. And the 27% are taker. Basically, with this model, we gain 3 basis points. Okay, 3 basis points with the fees that we are paying in the exchange, we have gained some likely amount of money with this trade instead of paying 23 basis points. Okay, this is another example. If I have to, what's going? Okay, if I sell, this is Algorand, and I had to sell. You see, most of the trade was done at the ask price, not the bid. So even the maker and taker was more or less 50%, we gain almost 5 basis points from this. Of course, there are some examples, not every trade is like this. We make some statistics, and to make a story short, to not bore you too much, this model allows us to trade with a 0.24 basis point in average. So basically with the 66% was made with market order, so 1.4 basis point, and the other 35 with the 3.4 basis point. This is crucial if you want to make, we are as a hedge fund manager, we manage a hedge fund. So if you want to manage a huge amount of money, it's crucial to have this kind of algorithm in place to prevent huge costs for the transaction. Because often the people are not taking consideration, but if you make a lot of trade, the cost of transaction is very important. I remember in 2017, if you want to trade, if you would trade in an exchange, in any exchange was 20 basis points, just for fees. And then there was the spread and so on. Okay, to make a short story, with the perpetual future, you can make a very smart strategy, long short, that prevent you from the big loss and help you to gain even in crypto market. Of course, you have to take very, very seriously in consideration how the leverage work, and never exceed the 2 times leverage. That means that if I have 1,000 euro, I'm sorry, you cannot invest more than 2,000 euro with the perpetual future, unless you have a huge risk to be liquidated. Thank you very much. If you have a question, I'm here. You want to debate your question?
I will come to my question in a second, but maybe there are some people that are really interested in this trading strategy. So if you have some questions, up with the hands, and I come around with the microphone. First question here. Don't be shy, guys.
How do you lower the cost?
How do?
How do you lower the fees?
Because of the amount of money that you trade in exchange. You can negotiate, especially if you are institutional, with the exchange to reduce the cost of trade. Sometimes it became negative. We are not arrived there, but we will do for sure. You can have also, for example, 1 basis point negative if you are making a lot of trade because you are providing liquidity to the exchange, so they pay you.
Anybody? Sorry, what was the next question?
So it is, to my understanding, that you long and short different crypto assets.
Yes.
So the money is made by still making a directional bet, right?
Yes, it's not just one against another. It's 50 against other 50, you know. So it's a question of, I can say, a very, very low statistical constant difference, you know. So, for example, if I invested on Bitcoin and short Ethereum, now for most of the time I make money, but there are periods where Ethereum reverse and I lose money. Okay, but this is an example if I make a long short with just one token. If I make a long short using statistical algorithm to detect who has more probability to to increase the value, and who has less probability to gain, but more probability to short. No, and I make two baskets. One basket of 50 tokens that are going up, and 50 tokens that goes down. Probably in the mix, in the middle, there are tokens that are going up and down. Doesn't matter, but slowly, there is this statistical arbitrage that take advantage of the in the price, because the tokens that are long gain more than the tokens that are short, that are going less better than the long, you know, or vice versa. Because this strategy gain a lot principally when the market goes down. Because the token that has not intrinsic value is too much, because we can discuss intrinsic. But the token that has no huge community, has not a huge liquidity, when the market go down, they fall a lot more than Bitcoin, for example. You know?
Okay, I think that's it. You got me triggered for a question that I meant to ask for a long while. You said you will like profit normally because Bitcoin goes up and Ethereum goes down. That is a lesson that I learned the hard way. But my question is, last time you were speaking here, I don't know if you remember, but you came up with a very bold prediction that Bitcoin this cycle will go and top at $250,000. I also learned the hard way.
cycle has to end.
The cycle
is still long.
What do you say to that?
Huh?
What is your answer?
No, it could be possible. Still be possible. Why not?
Okay.
The cycle will end in March 2028. So we have around 2 years from now. It's possible. I'm still confident.
So you're saying it's still kicking and like we're gonna go there this cycle and the cycle ends in 2 years.
Yes, the cycle is 4 years. So.
Bravo, bravo. Is there a question here? Yes, sir. Okay, next question here and the next question outside.
So you mentioned with market movements that the smaller coins that have smaller liquidity and community, is it often part of your strategy to bet against these coins and short the ones where you see bigger potential that it will go down?
Yes, we are fully quant, so that means that we rely only on mathematics.
Okay.
So can happen that Bitcoin 1 month is in the long position, the other month in the short position. It's not a question of brand or community. The community was, to make an example, to let you know, Melania coin was only going down, you know. So of course, if you short Melania coin, you make money, you know. Maybe if you short Bitcoin, not every time you make money. So it's better to, but it's just statistical. There is some indicator that are able to say which are more probability to gain respected another, and we just bet, but for a group of token, not for a single bet, you know, because a single bet can be influenced by, I don't know, Trump that say that there is the tariff in China and the market collapse, you know. So
right.
if you have a wider range of token, this is diluted. This risk is diluted, but you still have the probability that your indicator is making profit not day by day, but with a lot of constants.
Okay, great. Next question outside.
Hi. You mentioned quite an interesting word before, statistical algorithm. My question is here, you know, there's technical analysis, fundamental analysis. Do you rely only on mathematics per se and on numbers, or are you factoring in fundamentals as well before you short something? Can you factor that in your algorithm in any sense?
Yeah, we could, but at that moment is only statistical indicator. No other. We could also consider, but at the moment it's just a statistical. And we have a weekly frequency. So every week we update the portfolio. You know? You're
Very
welcome.
well. Next question here, right next to me.
So what's the history of Diaman Company, and who's your ideal customer?
Okay, good question, thank you. Diaman was born in 2002 as a financial advisory company providing quantitative strategy for institutional clients. Then we have a different experience that bring us in Malta in 2017. And we here in Malta we set up an asset management company because it was the last one jurisdiction that allow us to work in crypto without going jail, without know why, you know. Because in Italy there was a huge probability to go in jail for nothing if you work in crypto. So so we find here an amazing environment. An authority that was listening us instead of other authorities, and we set up the first alternative investment fund here in Malta in 2020, in January 2020, and then this fund is pretty new, but was in January 2020 we also set up a Cayman fund. And this worked very well for 3 years, no, 5 years, 5 years. And this year we bring the Cayman Fund here in Malta, because nowadays it's possible to do in Malta any kind of strategy, and so doesn't need any more Cayman, luckily. And this is one of the funds that we have. Yes.
What's your ideal customer?
Yes, sorry. We just create fund. The customer came from a distributor like Azimut. Azimut Group is a huge group in Italy that has 150 billion in asset under management. They are a minor shareholder of Diaman Partners, and so they are the principal distributor of this product. But we have also other distributors. But we don't go directly to the investor. We use intermediaries that are selling our product. For example, we have done with Bitwise the TP Bitcoin Gold that is going really well. This is listed, so the people that want can purchase. We don't know who is the investor.
Thank you.
You're welcome.
Are there any beginners here that thought, whoa, this is like a bit too complicated for me, and I would like to ask a question about something very basic? Don't be shy, maybe I'm gonna ask one of those questions because I didn't know. You started in 2002. Could you like explain in simple terms why you started to explore Bitcoin?
It was in 2016. We had all our client was bank, principally in Italy, and most of them was bankruptcy or purchased by other bank because there was a bank crisis in Italy. So we lost the 80% of our income, our net profit net profit, we became negative in just 1 year. So luckily we have a good history, we have a good relation, and if we have to restart again, we decide to restart not with the traditional business with bank, but with crypto. And so we came here to make business directly with crypto, but we understand very quickly that crypto space was still and is now still difficult for most of the people, because most of the people are not able to manage private key, public key, security, and so on. So we decided to create a vehicle to let the people invest in crypto, but in a safe way, with a risk management, professional risk management, with a safer way than go to an exchange and hope that it not disappear overnight. So this is what we aim to do.
Very well. If you have some questions, up with the hands, because otherwise there will be a question there. Okay, you go, but I'm gonna fire my final question very soon.
I have a question that is a bit technical, but more curiosity. How operator like you behave or react when there is, I don't know, so many tweets or a political figure that tweet like this, maybe over the weekend, and everyone is rushing, oh, sell it, because they are, I don't know, attack here or doing this or doing that. I mean, how, for example, your strategy will apply? Because there are so many people that, I don't know, Elon Musk tweeting one day and then everything goes down, Trump, and all these kind of things that impact all the entire crypto.
Good question. I started Diaman in 2002, of course was in traditional finance, in equity, because I was not able to manage my behavior, to manage my emotion. And I needed some rules, I started with rules, a process, and investment process. And the only way to you can lose money in many ways, but the only way to reduce the probability to lose money is to have a set of rules and follow this rule. So we define when we have to sell, when we have to purchase, how is the mechanism, and how is the frequency to manage this algorithm, and we let the algorithm do work, because anytime that I try to intervene in the algorithm, I make an error, And if you have an institutional investor, the institutional investor, if the model make a mistake, is a question of percentage. You can demonstrate that you cannot have 100% of success, A good quantitative model has 52-53% of success. Now that means that the other part was wrong, but you can demonstrate. But if you intervene and you make a mistake, you lose the institutional investor, because they say, I cannot trust you, So we need to realize to the model. But I never saw 1 year or one drawdown where the model make worse than the market. Anytime, at least the drawdown, maybe not the performance, but the performance you can make anytime. But if you lose 70%, especially in crypto, in crypto is possible, or more, is a mess to recover. You take a lot of energy to recover, and this energy are wasted. If you cut the loss, maybe you can gain a lot from this recovery, So in 24 years that we are doing this, never we made a drawdown worse than the market. Anytime we cut more or less at least the 50% the losses in the period. And this means that when the market going up, you recover faster and you make profit, and the other are still recovering the loss. So this is the good value of this kind of strategy. And it doesn't matter if Trump tweet or fucking as a fucking send bomb to anyone, unfortunately.
Trump was actually running on a Bitcoin ticket. He was attending Bitcoin Nashville the year before he was elected, and everyone was very optimistic. A good thing that Trump did was that there's no longer a hostile SEC, and the regulators in the US have become much more friendly, especially today, where a lot of the uncertainty has been dissolved. So that was good. Attacking Iran was maybe not so good for the oil prices and for the energy prices, especially specifically.
And for the world.
And for the rest of the world as well. But first comes Bitcoin, and then the rest of the world, right? So my question that I was alluding to at the beginning, how do you see the situation, especially of course the price impact of the whole situation on Bitcoin?
But you just replied before, because you related Bitcoin to energy. And it's technical true. There is a lot of people, especially in the US, that are considering Bitcoin energy money. No? And if you think that there is 10,000 or more companies around the world, some of them that are listed in NASDAQ or around the world, that are spending energy in the hope to have Bitcoin reward, because it's not sure that they will receive Bitcoin reward. This is a very strong point that relate Bitcoin to energy. And I demonstrate, there was an article in Cointelegraph 3-4 years ago, I don't remember, where I demonstrated that there is a strong relation between the hash rate, the increase of hash rate, the decrease of the remuneration per hash rate, because more the hash rate go up, and if the price of Bitcoin stay flat, for example, the remuneration per hash rate is diminishing, and it's very diminishing. If you consider the increase of hash rate, the diminishing of the remuneration of the hash rate, and the Bitcoin that are minted every day, you can find a power law curve that demonstrates that there is a strong relation between the price of the energy spent by the miner and the price of Bitcoin. So, why Bitcoin increase when the war happened? Because the energy increase, the oil increase, and all the assets related to energy are increasing, and also Bitcoin is increasing. This is the reason.
What can I say? Thank you, Trump.
No, Bitcoin will go up the same. That doesn't need to send a bomb randomly.
Yeah, there was never any doubt. Thank you very much.
Thank you to everyone.
Thank you very much. Guys, remember, he is not alone. The whole team of Diaman Partners is here tonight.
No, not all. Just
Sorry, a handful of people are here. One magical engineer that built the tool that was presented today. So make sure to hit them up before you go to the bar or after you go to the bar. We are going to be here next week again with a vibe coding focused event where some software developers have been developing a smart contract, vibe coding, and we are going to put it to the test. The question is, if you build something vibe coding, is it really safe? Next week, we are going to find out. Thank you very much and see you next week.